SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's digest some of this morning price action as it comes through and think about what it means for the rest of the week. So long story short, if you're busy, for instance, I'm not going to take up too much of your time. I'm a broken record. I still remain the same, looking for a pullback, a bullish retest of certain areas on certain charts, and provided those areas still remain, it's buy the dip opportunity. So we'll start with the euro then. So we got our 3 drives of bearish divergence. This one might take us down to a little bit of a deeper dive, maybe 106, maybe 105. Which is your 200 exponential on this daily. That's a retest of a golden cross. That would be bullish, right? There's a bullish retest. We've been waiting for something like this ever since the golden cross took place. This is something we always wait for. We being me, the royal we, and we've been waiting for that for basically a month now since we've had it. Again, golden crosses are good because it basically means moving averages moving into the correct places. The divergence of those moving averages strengthen the trend, and what you really want to get is a retest of some of the lower zones on that for the ultimate buy. Because again, you don't need to sit around for too long to know that you're wrong. If you can buy a golden cross retest or a longer golden cross retest, if it keeps going down, you get stopped out quite quickly. It's much better to try and wait or look to wait for one of those opportunities. And there's so many of these opportunities in the market at the moment because there's golden crosses all over the place. Golden crosses coming out of our ears and arses at the moment. They're everywhere. And so what we really want to see is retests of them on dailies, 4 hourlies, but also dailies. So here's one. We're waiting for it. Again, it would be a great place to try a position 105 at the moment on the daily for the euro. Again, I'm talking about euro dollar because it has such an effect on the Dixie. And the Dixie has such an effect on the markets and blah, blah, blah. It's the old domino effect that I refer to all the time now. And so obviously when we look at the Dixie, we get the opposite of that taking place. We have our death cross, and we were looking for a bearish retest of the death cross that's sitting around here at 104.7. And again, if we're super bearish on the Dixie and we're super bullish on the euro, this could easily just get a rejection from this level. On the Dixie, if we look at this, 103.8, just short of 103.9, there's a 50 exponential, a 50 simple just below it, and a horizontal area of significance. Pretty strong significance as well. So that could be the area we get rejected from and we continue down, which basically means for the euro we probably get a bounce around 106.6. Anyway, you see what I'm talking about. So continuation of the current trends in which they're in. So euro dollar up, Dixie down. And then for the S&P, what that means for me would be that I am bullish on this provided we're above 4,000. So long as we're closing above 4,000 and getting supports on 4,000 or above, because again, this is a strong trend at the moment, and I've been saying for a while, as I say every video since, I think this is the bottom for the S&P, at least for a little while now, several months, maybe towards some point later on this year, we could find a double bottom. That would also require other things to take place outside of the charts, but at the moment the fundamentals when it comes to central bank policies would suggest that this will continue to go up because it suggests that the euro will continue to go up and the dollar continue to go down. It would require something else, something that we can't see, black swan potentially around the corner, maybe some more escalation over in Eastern Europe, something along those lines. Could bring this down, but for the moment the charts look great, and I'll be looking for it. Like I say, I'm bullish on this provided in the short term I'm bullish on it provided we're above 4,000. And this seems like a reasonable area of resistance to be rejected from. We could also come up and test these areas 4,300 and get a rejection from there, and then we'd probably form a golden cross at that point, and the rest will be similar to everything that we're talking about all the time. One quick view on the Bitcoin dominance chart is that we're actually having a bullish retest on the golden cross on the 4 hourly here. So there is a chance, although we should never underestimate the power of altcoins, especially throughout this bear market. We've seen it time and time again, that the dominance chart really doesn't like rallying too hard. But if we were to get a bounce in the short term, this is where we're going to get it. This doesn't mean that Bitcoin rallies. It doesn't mean that Bitcoin dumps. It just means that you're in a better position in a larger Bitcoin position, right? So you're better off holding more Bitcoin than altcoins as you test significant areas of support on a dominance chart. Although, like I say, never underestimate altcoins because they are different this time around. We can think about the 50 exponential as well, which is 43% dominance. Again, you know, it would be the most bullish portion of a golden cross. Golden cross set down here, 200 exponential sitting down at 42, 50 exponential sitting at 43. So there's a reason to suggest that we do break down below 43. But if we were to do that, you know, fair play. It's only small, alt seasons, whatever. And we were talking about this, was it last couple of videos? We were talking about alt seasons, yeah, small alt seasons, but generally a decent market for altcoins as well. On the whole, remember, you know, we've got to put it into context of the last bull market, which was very, very choppy for a couple of years after the initial run. Right, so let's just think about Bitcoin now. We'll leave it there. Bitcoin now broken below the 23,300. So there is an area, an intermediate area. Again, we're just chopping around these $1,000 drops and stuff. And we could see ourselves come down to 22,300 and find a little bit of a bounce there. That's reasonable to imagine that. But as these 4-hourly moving averages start to cross below the 23,300, they will be resistance. And so if we get a bounce, we'll probably get rejection around there and then move down to a bit more of a sturdy buy the dip kind of area, which is that 21,500 to 20,500. Now, personally, you know, 21,500 is more of an area to bounce than a lower zone. I know we always want lower, but if we are going to bounce and we're going to bounce to make a new local high on this, we do want to do it at 21,500 because that's backed up by a 4-hourly moving average of 200, which is a good place. It's also backed up by almost a daily 200 exponential moving average. So more support and more hope that we catch a bounce at the top area of this buy zone than hoping for us to go down lower so we can buy lower. If we do go down lower to the bottom of this box, yeah, it's a decent area to think about buying for a long term, but for a short term bounce, probably not so much. Wait a minute, I've got a moody child on the tablet at the back. Yeah, Daddy's working at the moment. Okay, baby, I'm talking to the internet. I won't be long. Right, so just to recap on this, I pull back to these areas. The top area is better than a deeper retest of the lower zones because the supports are more, well, they should be stronger at the top than they are at the bottom. And the bottom, they're not that strong. They're not really. So, you know, if we do come down to there, expect probably even lower than that. But let's not jump the gun. We're very early days into this pullback, and it is pretty timid so far. And it will require the American markets 4x as well. To open and continue with their current direction. All right, okay, I'm going to help you with your tablet. Right, so that pretty much sums it up. There's not much more to say about this. Wait for the American markets to open. I feel as though continuation in this current pullback is most likely what's going to happen. We'll see more towards the end of the day, towards the end of the trading session, but this is my expectation. Pullbacks, continuation from what we saw on Friday, and then buy the dip at these significant areas on all these charts. One last thing I'll say is that the symmetry of all of these charts is good. The fact that they're all pulling back at the same time, and with that makes it more of an opportunity to buy the dip if they all basically come down to these areas that we're focused on these charts all at the same time. I really got to go. I've got to sort this Peppa Pig situation out. Until tomorrow, I hope you have a nice day. Take it easy.